Marvell's rally is being driven by AI infrastructure deals, not by vague enthusiasm around chips. This matters because the move is tied to specific revenue lines and a deeper place inside the Nvidia ecosystem. Investors are treating Marvell less like a side beneficiary and more like a design and interconnect player in the AI build-out. The tension is whether the supported catalyst is strong enough to survive the first reaction and keep drawing buyers once the easy excitement fades. The article said MRVL was up 55% year-to-date and 168% over 12 months. Nvidia invested $2 billion through a private placement and tied the deal to NVLink Fusion collaboration and semi-custom AI work. For searches like why Marvell MRVL, this matters because the move is tied to specific revenue lines and a deeper place inside the Nvidia ecosystem. Investors are treating Marvell less like a side beneficiary and more like a design and interconnect player in the AI build-out. Those confirmed details matter because they tell you whether this move came from one headline or from several pressure points landing together. Marvell also closed acquisitions of XConn Technologies and Celestial AI to strengthen interconnect capabilities. The practical driver is data center architecture. As hyperscalers buy more custom silicon and faster interconnects, companies that connect the chips can capture a large share of the spending stack. Interconnect is the hardware and networking layer that lets AI chips communicate fast enough to act like one cluster. That mechanism is the part traders can miss when they only look at the chart. That affects equity investors first, but it also matters for the broader AI trade because networking, retimers, and optical links decide whether large clusters actually scale. This is why the move can look larger or weaker than one headline suggests. In stories like this, the structure underneath the price often matters as much as the candle itself. The open issue is valuation versus execution. The stock has already run hard, and even the supplied consensus target sat below the most aggressive price reactions described in the article. Why Marvell MRVL is the phrase tied to this setup, and the open issue is valuation versus execution. The stock has already run hard, and even the supplied consensus target sat below the most aggressive price reactions described in the article. A market can move before those answers arrive, but it usually cannot keep the same pace forever without them. The important point is that price action and structure are not the same thing. A sharp move can be real while still resting on fragile conditions that have not been fully settled. That is especially true when leverage, concentration, or technical positioning is doing part of the work. Watch whether networking revenue really doubles as guided, and whether custom silicon becomes the quarter-by-quarter growth engine management is promising. Timing matters here because the next clean signal can separate a durable move from a temporary burst. If that signal confirms the story, confidence can rebuild quickly. If it fails, the move can unwind just as fast. The broader consequence is that traders are not only pricing a chart. They are pricing confidence in the mechanism underneath the chart, whether that mechanism is supply, leverage, collateral, or narrative follow-through. That is why this story matters beyond one intraday move and why follow-through is the real test. For searches like why Marvell MRVL, watch whether networking revenue really doubles as guided and whether custom silicon becomes the quarter-by-quarter growth engine management is promising. The practical takeaway is simple. Watch execution, watch the key level or flow that matters in this story, and do not treat an early move as proof that the final answer is already known. The market still has to validate it.